Good afternoon, everybody. My name's Ian Gervin from the Ingeus Money Management team. I'm here today with my colleague Parveen Akhtar, just to give you some little bit of help and support with regards to your personal circumstances and your personal finances when you're moving out of the provision of the care environment and into the private world, looking after your own finances. So the message is going to take about an hour. Just to go through a few pointers for you. But if you do have any questions, please, in your right-hand column, you'll see right at the bottom, there's a little chat function. If you want to ask any questions in that function, please type in the message there, and my colleague Parveen will try and answer them as we're going along. This presentation is being recorded and it will be shared at a later date. So if you want to look at it or you miss anything during the event, then you can always recap on it later. So what we're here to do today is just try and give you this little bit of support around what help is available for you. Okay, and there's just some aims there on the workshop work we're trying to do, because we know that care leavers really start to worry about having to go out on their own, finding their employment or their education, finding somewhere to live, managing their own finances by themselves, and they really do not know where to get that support. And especially in the current environment with the cost of living crisis, it's probably even harder now than it has been before. And we've been dealing with people who've been unemployed for months because of COVID, and they are grown adults who've been doing this a long time and they still haven't got to grips with their finances. So the first thing to say is you're not on your own when you don't know what to do with your finances. What I'm going to do today is trying to give you some instruction to make life easier for you when you get out into that environment. Okay. Whenever we talk about personal finances, we always think about like the high street banks and what have you, but things change so quickly nowadays. And you can hear on the news and on the TV about banks closing, all right? This means you've not really got any access to get support where you normally would have done. So I'm going to give you some hints and tips today of what to do, how to manage your money, what support you can get, and how you can get hold of it. So the types of things we're going to be covering today is we're going to look at some budgeting and some money management skills. So how do you keep on top of your finances so you don't get into financial difficulties? We're going to look at the different types of bank accounts that's out there in the marketplace, looking at what each should be used for and how you get access to them. We will take a little bit of look on savings, both long and short term, because with everything in life, it's nice to have money in your back pocket, so you don't have to rely on borrowing or lending from other people. We'll then look at salary and pay slips, okay? Just so you understand what a pay slip is trying to tell you. Because unfortunately, until we get our first pay slip, we don't really know what it means. So I'm just going to give you some idea of what to look out for so you're in the right place when you're looking at your money. And then finally, at the end, we're going to look at some borrowing needs, all right? Some good debts that you might have and some bad debts that you've got to avoid. So that's basically what we're going to be covering today. So hopefully by the end of this session, you'll have taken some time to just learn a few critical rules to help you keep financially secure. Okay, and we'll even touch a little bit on student finance, just in case you decide you want to go on to university and develop your skills to a greater extent so you can look at better employment going forward. So if everybody's okay with that, what we're going to do now is start with looking at the budgeting skills. Now, when you're looking at budgeting, it can be boring, okay? I'll be honest with you. It's something that if you talk to a lot of adults out there in the general public, if you ask them what a budget plan is, the vast majority wouldn't know what one is, all right? They would not have any idea what you're talking about. But if you can get the right skills and the right behaviors in place at the beginning of your working life, it will make life a lot easier for you going forward throughout your years and your careers down the line. Because what a budget plan does, it helps you to look at how much you've got to pay out each month. Okay, so make sure that the wage that you get when you're in employment is enough to cover everything that you need to spend on a monthly basis. By doing this, you can make sure that you're not going to be getting into financial difficulties and you're not having to borrow when you don't need to. So what we're going to do, we're going to give you some skills and some ideas of how to do a budget plan. But there are online calculators that you can use as well, all right, which we'll talk about in a little bit later, which will give you the information if you don't like using Excel spreadsheets or you don't like writing things down. There are some computer-based ones that you can look at to give you that support moving forward. So what does a budget plan do for you? Well, the main thing that it does is puts you in control of your finances. It gives you that visible picture on a monthly basis of what are the main payments that you've got to make during that month. It'll also reduce the amount of what we class as impulse spending. Okay, because if you know that after you've paid all your bills, you've only got a certain amount of money to spend each month on the incidentals such as food and drink and what have you, it'll make you stop suddenly going out and having a splurge and spending lots of money on items that you probably don't need, but have just done it to actually because your friends have done it or because you've just decided you need a little bit of a boost because you're feeling a bit down. Okay, by having a budget plan and knowing what money you've got to spend each month, it'll stop you doing that sort of purchase. It'll also help you decide what you can and you can't afford. And this is more further down your career when you may be looking at purchasing a house or you're looking at buying a big item like a car or something. You'll be able to use your budget plan to see if you can afford to make those payments that are required for that item that you're looking at. What it also does is helps you keep track on your spending. And I'll give you an example in a little while about a thing that happened to me when I was working, when I wasn't 100% on top of my budgeting needs. Now, I was a bank manager for 30 years, all right, and even I made mistakes. So by learning from those mistakes, that's how I'm able to give you guys a lot of support and a lot of skills to help you avoid the errors that most adults have made. Once we've got a track of how you're spending, then you can start then to look at savings. Okay, putting some money behind you so that you're not in a position where you're struggling if you've got any unforeseen circumstances. Okay, the perfect reason is to make sure that, say for example, you have a fridge and it breaks, you've got this money to actually go and purchase one rather than having to get things on credit. So your budget plan will give you that structure, give you that organizational skills to make sure you're in a better place should any instances like this occur. So this is when I was a bank manager. Okay, this is an example of an impulse spending or not keeping track on your money that you have got to try and avoid. I used to open up the office every morning. So I used to get there early. I'd be stood around waiting for people to turn up so I could open the office up so I could do the security checks. So I'd always go and get myself a cup of coffee. When I got made redundant, I actually sat down and looked through my finances to see where I could save some money. I worked out that in 12 months, just by getting a cup of coffee every day, I'd spent over £1,000 on coffee. Okay, that's a holiday. That's half of your kitchen furniture that you need to spend on. Okay, so there's things there that I have thrown away, and because it was just the odd £2 in my pocket, £2-3, I didn't notice I was spending it. But when you actually look at it in detail, it's money that I'd really thrown away. So by having your budget and being on top of your budget, it'll stop you making these sorts of mistakes. So let's have a look at what a basic plan looks like. So when you're setting up a budget plan, you've got to start with what is commonly known as your, excuse me, excuse me about that. What you need to start with is your priority bills. Okay, now these are the ones that's going to keep the roof over your head. Okay, so it could be either a rent if you're going into renting accommodation, or if you're lucky enough to be able to buy a house, it would be a mortgage. It would be all of your household bills that you have to pay. So your council tax is extremely important. Just so you know, guys, council tax is the one bill or one of the bills that you could actually get taken to court for not paying, and ultimately potentially go to prison. So that is really an important one to make sure you keep on top of. You've got your fuel, so you could have that with the same supplier, so that's called dual fuel, or you could have it separate as a gas payment and an electric payment. You don't have to have it with the same provider. Okay, you can look around to see who gives you the best deal. You'll have your water, and potentially if you're renting accommodation, you'd have ground rent. So the first thing you do on your budget plan is to make sure that all of those items are on there, and they are the first ones that will always get paid. They are the things that you have to make sure, because it's better to have a roof over your head and keeping warm than actually be moving around trying to find somewhere to live, sulfur serving, living on the streets, what have you. If you pay them, you will have a roof over your head. Now, the way to set up your budget plan, and it's quite structured, is you look at your outgoings for the last 3 months. So you will get your bank statements, okay? Or if you're going into accommodation for the first time, ask around to find out what everybody else is currently paying with regards to the gas and electric and what have you. And you can use that information to give you an idea of what your plan's going to be, but then review it after 3 months to make sure yours is correct, because somebody might be paying X amount for the gas and electric, but they might be wasting a lot, and you've gone in and you can save money by keeping your lights off or only using them when you need them. So you might be a lot less than them. So review it after 3 months to make sure that your figures are actually what you're getting charged. Complete a budget plan using all the information that you've got. And I'll give you an example of this in a moment, an Excel version, just to show you what one will look like. Now you put on there both fixed and variable expenditures. Okay, so fixed ones, things like your TV license, your mobile phone bill, your broadband bills, house insurance, things like that. There are some which are flexible. So they could be, if you did have a credit card that you was paying on a monthly basis, then that can go up and down dependent on the debt that you have. Okay, so they're variable bonds. But everything on your budget plan is things that go out of your bank account via a direct debit or a standing order. Now, direct debit and standing orders are agreements that you've got with your providers, so they can debit your account directly, and then they take the money out to pay your bill each month. Okay, so you don't have to do anything with them. Once it's set up, the provider will do all that for you. Don't include what we call as mad money. So that's if you've got, for example, you buy something that's going to last you for 3 months. Okay, still include it in your budget plan, but just divide it by 3 and put it in as a monthly payment, so that when you next have to purchase it, you've still got the money in your bank account to cover that payment. So what needs to go on the plan? Well, this needs to be all income that comes into your house. So that could be wage, it could be benefits, it could be anything like that. It could be any sort of grants that you can get. Put all them down on your budget plan. All your priority bills that we've talked about, all your fixed expenditures, your variable expenditures, and include everything, even if you think you're going to wish to stop them. Okay, until you've actually done that, don't take it off the plan. I used to work with people in the armed forces who would come to me and I'd do a budget plan with them and said, oh yes, Ian, I'm going to cancel that, I'm going to cancel that. They'd come back to me a month, 2 months later and said, Ian, this plan's not working. So I'd look back at the plan and say, well, you're still paying those out. why have you not cancelled them? Oh, I forgot. Okay, that's why you don't cancel it off your plan until you've actually done the physical task of doing the cancellation. One thing, guys, that's always missed, or I found out quite a lot that are being missed, are mobile phone insurance payments. People take out new contracts with new providers, get a new phone, take out an insurance contract, but forget to cancel that they had already going out for the previous phone. Worst case I've had is somebody was paying 6 mobile phone insurances out at the same time, so they were wasting about £30 a month with insurance premiums. So make sure by reviewing this on an ongoing basis, you're not paying for things that you've cancelled or you no longer have. Now, this is an example of a bank statement, and we've just made these figures up, okay? Now, if you look at that, you can see at the top of the screen, you've got an opening balance. So this person started with £112.50, okay? They've then got the salary paid in, and then all down the left-hand side, you've got everything that's going out of that bank account. So you've got your rent, you've got your council tax, you've then got your gas, then you've got some food shopping. So you've all got it going in. So some of them are fixed expenditures, some are variable. There's your favorite cost of coffee in the middle. All right, another wasted one added to my list. Okay, so we're looking at that. You're going down to the bottom and it says, oh, you've still got 26 pence in the account. So you're not what's classed as overdrawn. Okay, overdrawn is where you actually have spent more money than you have in your account, and now you owe that money to the bank. Okay, what we want to do is try and avoid that scenario, because if you do that, you will get charged by the bank, so you owe them even more money. Now, people that I've shown this to have said, oh, good, they're managing the finances well here. But in my world, they're not, because you started with 112, you're now only on 26 pence. If this person did exactly the same thing next month, they will be overdrawn by £112 because they're spending 112. They're paying more money going out than's coming into the bank account. So what they need to do is cut back on some of that incidental spending. This is where the budget plan comes into place. But trying to do everything with the one bank account is very difficult. So I'm going to give you some information in a moment about what types of accounts you should be having to make life easier for you. So how many bank accounts do we think we should have? Like I said, in the previous example, it was one account doing everything. But that makes life very difficult for yourselves and everybody else to actually keep on top of where their finances are. Now, this is my opinion. Some people would agree, well, some people disagree. But as a bank manager, this is what I would always say to my clients, to give them the best opportunity to keep on top of the finances. First of all, you would have 3 accounts. You would have 2 current accounts, which are the bank accounts which allows you to pay for direct debits, standing orders, but also that you can use for making payments either in shops, online, over the telephone, okay, via apps. That's what a current account is. So you'd have 2 of those, and I'll explain to you what each one does in a second. You will then also have an instant access savings account. Okay, this is where you will start to build up a little bit of a slush fund so that if anything happens in the future, you've got some money behind you to be able to help you out. So what do each of these accounts do? Right, so first of all, we will start with the first current account, and that's where you have all your set payments going out. So all your priority bills, all your direct debits, all your standing orders, that would all be set up under one account. Okay, and then when you get paid, you will transfer into that account the full total of all those payments that you need to make. Your second account is what you would use for doing your everyday spending. So this is where you would pay for all your food shopping, where you buy all your clothes, if you were going out socializing and entertainment, you would use the money out of that account. Okay, so that is always in there. So that's your every weekly spending, and whatever that money is, you've got that left to spend during that monthly payment. So when I said before about spending money ad hoc, you will know that if you've only got, say, 500, 600 pounds to spend each month, you can't spend more than 150 pound a week. Okay, if you're doing that, you're going to struggle to make it till the end of the month. All right, so by having it in a set account, you can keep on track of that a lot easier than if it's all in that one account. Because if it's all in one account, you'll get very confused. You may forget that a payment's due to go out. You think you've got money left, and then suddenly a direct debit goes out and you're now overdrawn. So try and keep them separate. So one for your bills, one for your spends, and then you set up your savings account to give you some little bit of extra money. Now, instant access accounts are where you start, because that'll give you some money that you can get at to if you were needed to. We call this an emergency fund. And you should always try and get the equivalent of 3 months' salary in your emergency fund. Purely and simply because if you were to become unemployed and you're reliant on benefits, by having that slush fund, that'll stretch the amount of time you've got before you can get a job. Okay, if it's taking you a while to find employment, you've got that money behind you to help you pay all your priority bills. Okay, if you've not got that money in place and you're relying purely and simply on the benefit system, on universal credit, then it will not last very well and you might have to let some things go. All right, so your standard of living, if you can get an emergency fund in place, will be a lot healthier than if you don't have anything there. So always try and get an instant access savings account started. But you could include that in your budget plan, and I'll show you that in a second. So this is a basic budget planner that we produced. Okay, now as I said, some people would like to do it on a piece of pen and paper. Some people would like to just do it online. There are plenty of budget planners that you can find on the internet that will help you do this sort of exercise. If you're good with Excel spreadsheets and you've learned that in college or in school, then this is what it would look like. So what we've got here is a list of all the standing orders that need to go out the account every month. Okay, so your red zone, that is the total amount that you've got to pay in bills every single month out of your salary. Now, granted, guys, this was taken before the hike in the energy bills crisis, all right? Because you can see gas and electric there at the moment is £75. You're probably looking more like £250 to £300 now. Hopefully, cost of living will improve and those figures will start to come down again. But this is just for an example purpose, so don't take it as being 100% accurate at the current levels that we are. But if it was right, you've got the red zone there. So that's your total amount that you've got to pay each month out in bills. So in that first current account that we talked about on the previous slide, you would transfer, so say in March, where we are now, you would transfer £1,034 into that account to cover all your bills. You now know that you don't have to worry about any bills that you've got coming in because they're already paid. They're all covered for, they're all done, you don't have to think about it. Your green zone then is your total income that you've got coming into the house. So that's your wage, or that could be your universal credit, or it could be some sort of bursary that you get if you're going to university. Okay, so you take your red zone off your green zone, and that gives you your actual spending amount of money of £459. So that will be the amount in the second bank account that you use for your food, shopping, etc. Once you've got that figure, divide that by 4.5, because there's usually 4.5 weeks in a month. And that'll tell you what your weekly allowance is. So in this scenario, in March, you would have £102 to spend. You will know quite quickly if at the beginning of the week you've suddenly spent £80 and you're only 3 days in, You've only got £22 now to last the rest of the week. If you didn't have a budget plan, you would not know that. You would know that you'd spent a lot in the first couple of days, but you still wouldn't be on top of it. And it could finish up that after 3 weeks in the month, you've got no money left. And then you're really having to scrimp and save and beg and borrow to actually get you through until your next payday. Okay, so by having all that in place, you're already there. Now, the third account was the savings account. And if you can see just above the red line there, I've marked a couple of them in orange. That's already included that you're going to put £50 a month away into your savings account. Now, the reason I've highlighted February and March is because when you're paying your council tax, okay, we pay it that over 10 months of the year. So on February and March, we get a break where we don't have to pay council tax. So those 2 months, if you're paying £50 a month and into your savings, you may be able to add a little bit extra into your savings on those times. Okay, so have a look at that. Now, one thing I would say is start low and build your savings up. Okay, the error I see with many people with this is they get a first salary, they suddenly see they've got all this money in the bank account, so they try and save a lot early. So they might put £200, for example, into a savings account. But then because they're not up to date with the actual budgeting needs, they actually get to a point where they've got no money left in their middle account and their spending account. So they take money back out of the savings. So say they've taken £100 back out. So that person is now thinking, I'm not very good at budgeting. This is a total waste of time, and they stop doing it. If you start with a smaller amount of £50, but then you get to the end of the month and you've still got £50 left in your bank, then top that up into your savings account. You've now got £100 in your savings. You've got the same amount of money as the first person, but now your mind talk is saying, I'm good at this budgeting. Okay, I've not overly saved my £50 that I planned to, but I've saved an extra £50. In reality, you've both still got the same amount of money, but you're on top of your finances a lot better than the people who did the first example, and you're more likely to keep on track and keep on top of your finances if you do it that way. So don't be a hero, start small, build it up, and you'll find you'll make a bigger success doing it that way than trying to go the opposite and save too much too soon. Okay. We're now going to look at some different types of bank accounts because depending on where you're at the moment, you might just have some basic ones, but I just want to give you an idea of what sort of accounts are out there on the marketplace so you can get the right accounts for what you need them for. So we're looking at the normal everyday bank accounts. You've got your basic bank account, which is good for your direct debits and your standing orders. You've got current accounts, which are the same as the basic bank accounts, but they have a few more options available to you, okay? Some still do checkbooks, but these are the ones that will let you go overdrawn, okay? So overdrafts are always there as an emergency, but if you can keep on top of your budget plan, you wouldn't need to use your overdraft. But they also have other things linked to them like Apple Pay, Google Pay, that you can use on a daily basis rather than using your bank cards. You also have what's called packaged accounts. Now, these are ones where you might have included cover for breakdown insurance for your car, or mobile phone insurance, or travel insurance. But they do come with a monthly fee. And as well as that, there might be some certain criteria that you've got to do to actually qualify it. So it may be that you can't go overdrawn and you've got to have so much money paid into the account every month. So they're not right for everybody, and don't try and get convinced by any bank or any telephone operator when you're talking about this to try and get them to persuade you. If it's not right for you, just stick with the basic bank accounts. Okay. If you do decide to go onto university or to further education, there are specific student accounts that's out there. which will give you an interest-free overdraft if things do get tough for you. But you might get gift vouchers, rail cards, other sorts of benefits that the students may be needed. Okay, so have a look around to see if there's any account that's right for you. And the last one, and it's probably more prevalent now than ever, are online or app-based bank accounts. Because, as I said earlier, there's a lot less high street banks now. So there's other ways of doing your banking. And there's places like, you'll see them advertised, Monzo, Starling Bank, and there's a few others like Chase, okay, where they're app-based accounts. And sometimes, where we talked about the 3 bank accounts before, you can have 3 pots within your bank account with these providers. So you might just have a link with them, but have the little pots doing their own different tabs. So if you are more tech-based, then that might be an option that's available to you as well. But they all work on the same sort of premise. They'll all do the same things that you need them to do. All right, it's just whichever is going to be best for yourselves, which you feel that is going to be right for the way you want to manage your finances. Now, how do you do a bank account apply? You can do it in branches if you can find them. You can do it online on the web pages. You can do it via the apps, or you can do it over the telephone. All right. Now, some people will just go onto a comparison website to search for the best one for them, which is fine, but not all providers list their accounts on those websites. So have a look. If it's not right for you, you might have to just search some individual companies themselves. All right. Now, you might ask your bank to actually just apply for a basic bank account. What they will probably do is apply for a normal basic current account. Okay, because if you qualify for that, that's what they will offer you. All right. If you don't want that, you can decline it and go to the basic account if you're worried about going overdrawn. But don't worry if they come and say it just means that your credit history is better and they're saying you actually can get a better product if you wanted it. If it's not right for you, tell them, no, can I just have a basic one at that point and take whichever is right for you. As we've talked about, have more than one bank account. If you are declined a bank account application, but you don't know why, you can complain to the bank and get them to give you information as to why it's been declined. And if you're still not happy, go to an advisor or contact Citizen Advice, and they'll be able to look at the situation for you and may be able to give you some information to help you understand what's gone wrong, and also how to make it easier for you to get it correct. So it might be that there's something on your credit file that shouldn't be there. Excuse me. So if you're unsure, ask for a reason and go and get advice to find out if there's anything that can be done about it. Now, we've touched a little bit on savings, all right, and I'm not going to go into this in a great amount of detail, but I just want to highlight to you, especially when you're further down the line with your careers and your lifestyle, about the different types of savings accounts are out there, just so you know where you can be aiming for in the future, okay? The good thing is, like we said before, is look at having 3 months in an instant access account to give you that emergency fund to protect you if anything goes wrong. It'll help you then keep on track of everything until you get that new job, especially that. Or if you've got a car and then you've suddenly something goes wrong with it and you have to get rid of it, you've got some money there to help you buy a new one. That's what an emergency fund does. Okay, so keep on top of it, try and get to that 3 months. Now, it's not going to be something you're going to be able to do quick. All right. In this example, if all your bills are £1,000 a month, then you would aim to get to 3,000. But that's going to take you a number of years to get there if you're only saving £50 a month. Okay, so if we do £50 a month, 12 months, you're looking at your £600. So that'll take you 5 years to get to your 3,000. So it's not going to be quick, but stick at it, keep working on it, and life will get, if you get a pay rise, increase the amount that you're putting into your savings. but you set yourself that goal so you know that you've got the amount saved to help you. All right. Keep on track of it. Keep doing it. If you can put more away, then do it. All right. But don't leave it to a point where you've saving everything and got nothing to live on, because then you'll find life is difficult. So when you're looking at your spending habits, and we've touched on this a little bit earlier already, you want to look at how much you're going to save, how long is it going to take you to reach your goal. Okay. Look at tax-free savings as well. Most banks will have savings accounts where if you're in employment, you get taxed an amount of money on the interest that you earn from them. So they will give you interest depending on how much you've saved, but then the government takes a little slice of that to pay for other things, and it goes into the government's pot. There are, if you're working, there are some accounts where you don't pay any tax, and they're called ISAs. So if you're in employment, you should always have your ISA first, and you can pay £20,000 a year into an ISA. Okay, so that will be totally tax-free. Obviously, if you're able to further down the line earn more than that in your savings every year, then look at other options, but always go with your ISA first. As I said, there are hundreds of different types of ISAs, savings accounts that's available to you. And I'm just going to highlight a few of them now. Now, this list is going to be a very small list. There are lots of different types of savings accounts, but these are the main ones that you'll see every day. Okay, so you've got instant access accounts. So they are like ISAs, but you get tax on them, you can get money whenever you need to, and you can pay money in and take it out whenever you want to. All right, so you can dip in, dip out, not a problem. You then have regular savings accounts. So that's where you decide to put a certain amount every month, the same amount into that account. Now, there are some restrictions on that with regards to how you withdraw it. It might be that you can't get at that money until the end of the term that they put on. So some regular savings accounts may be 1 year, some are 3 years, some are 5 years. So if you've got a regular savings account for 5 years, but then 2 years' time you need to get at that money, you can get at it, but you will be charged for doing it. So regular savers have got to be really an option once you've got your emergency fund set up. You've then got fixed term deposits where you may get hold of a lump sum of money that you don't need on a daily basis, but you want to make a bit more, earn a bit more interest on. They pay higher amounts of interest because you can't touch them. All right, so look at them if you've got a large amount of money to put aside. There are some things called index-linked accounts, which are very rare nowadays, but they are mirroring what's called the stock exchange. So you'll hear people on the TV talking about the stock market. Index links basically is a savings account that reflects how well that organization is doing. So some years you might get a really good return, but other years, like when the recession hit a couple of years ago, actually they started to fall, so people were losing money on their investments rather than earning it. So index-linked accounts, I wouldn't really touch until you get a nest egg behind you and take financial advice about looking at those. And then you've got your cash ISAs, okay? So this is where you can pay in whenever you want to. You can withdraw whenever you want to, but with that, you've got your annual limit of £20,000 a year, all right? So if you've paid that in and then drawn money out, if within that tax year, you cannot add to it again because you've reached your deposit limit, all right? So try and avoid using that if you can as your emergency fund, because if you take it out, you can't add it back in if you reach that limit. Now, there are other sorts of things you should be looking at, okay? So about tax, income tax, excuse me. If you're a taxpayer or a non-taxpayer and you don't earn enough to qualify, so your current tax limit is £12,500. If you earn less than that, then you actually won't get charged interest on your savings. You won't get charged tax on your interest payment, sorry. Okay, Anybody above that should be looking at the ISAs. Okay, so everything under 12,500 earned a year is tax-free with regards to savings. Anything above that, then look at your ISAs next. This is just something good to know, all right? There are limitations that you should have with regards to banks, with regards to how much you should have totally invested within a company. And this happened a lot when the financial crash happened a while ago. And what happens then, people were finding the banks were folding. They had hundreds of £1,000s in the savings, but because of the insurances that are in place in the banking market, they only got refunded £85,000. Okay, so what I would do is, if ever you get into the luxury of having more than that, have some of it in a separate bank, so you don't lose potentially some money if either of those banks fails. But that's just a good to know. Now, there are other types of investments, and this is more if you have some large investments, large amounts of cash available that you can spend. If you've done very well in work, you've been able to save a lot of money, or you've been able to make money by selling property, whatever, there is a lot of ways that you can make that money work better for you. Now, there's different types of investments. At the moment, we've all been talking about the cash elements. So all the bank accounts and all the savings accounts we've been talking about are what's classed as cash investments. You could have shares, stocks and shares, where you're investing in companies, and the return that you get depends how well that company does. You could buy properties. Okay, you'll see TV programs where people will go to auction, buy a property, make some changes, and then sell it at a profit. That's where you get the property side of your investments, where you may be able to make lump sums quickly if you're able to do that. And then you've got what's called fixed interest securities, which are gilts and bonds. Okay, so that's where, again, you loan money to the company or to the government, and they will give you a set payment back. Whenever you have this opportunity and you're thinking about taking any of the options other than cash, then definitely seek financial advice. Don't try and do it yourself, because there's so many loopholes and so many little things that you might not know about that will cause you problems going forward. So please take advice. They will charge you for the advice, but if you're happy to make the investment, it's better to be safe than sorry. Go and get some qualified advice. You can find it on the government website of a register of all the registered, authorized financial advisor companies in your area. Go and speak to one of them and make those investments that way. Like I said before, the cash savings are a lot more secure than investments. Investments can go up and down dependent on the performance of the bonds or the performance of the markets that those companies are invested in. So you've got to be prepared that some years you might make a lot of money, some years you might not make so much, some years even you could lose some money on your investments. But you've got to look at it. If you're looking at long-term investments with these, you've got to look at it in that way. You've got to look at it as it being a 10, 20, 30-year bond. Okay, and don't panic if something goes wrong and there's a dip, because the possibility is it'll recover again and you'll get back to where you were before. All right, but again, as I said before, speak to an advisor and they'll give you all the help that you need. The types of investments that they can look at are listed there, and again, that's just a few of them. There are some things in there that you can look at. You can find all this information online about different types of products. Places like Money Saving Expert can give you advice on these sorts of products. They can tell you where to look at, what type of investments are out there. So have a look. This will be further down the line. This is nothing to worry about at this moment in time, but hopefully you'll get a brilliant job, earning lots of money, be really successful, and then you can look at these types of investments going down the line. Okay, it's all around how well you do. Finally, we're going to look at we're going to look at pay slips just to give you some advice on this. Okay, so now we're going to look at what does a salary tell you. Okay, if you're looking for a job and you find an advert and it says you're going to get paid £22,000 a year gross, that means nothing to you. So you can go onto websites like Money Saving Expert and they have income tax calculators. And what you'll do, you'll put in your salary and a box like this will appear. So it'll tell you how much is going to be paid each month, how much you'll get in wages, and how much you'll pay to various things. So we all have to pay national insurance, so that pays for our health service. We all have to pay into a pension scheme. You get a tax-free allowance, okay? So the first proportion of your income, you don't get taxed on, okay? So you, in that first example, 22,000, you've got a tax-free allowance of 12,579. So you actually only in the year get taxed on 8,500. Okay. Looking at your monthly basis, your gross wage would be 1,833, but your actual take-home pay, once all your deductions have taken place, is going to be 1,493. So if you remember on our budget planner, that green line that we had, that's where you would put in that figure. And that will then tell you how much you've got left after you've paid all your bills, so you know what your weekly spend is going to be. So that'll be useful for you when you are looking for employment. When you get employed and you get your pay each week or each month, you'll get a pay slip, and it looks like that. So it'll look and it'll tell you who your employee is. It'll tell you your payroll number, what your full-time salary is, how many hours you're working, okay? What deductions are taking place, what other payments have been made, and then it'll give you your monthly salary and your year-to-date salaries as well to give you an idea. So in this example, you've got on the left-hand top, near the top, under the name, the customer's name, you've got a tax code of 1250L. That's basically a tax-free allowance. So on there, it will always tell you that. If you get a tax code and it's got a 0 in there, it means that it's not been set up correctly. So you need to get in touch with your HR department, find out why that's not been done, and they might have to help you contact HMRC, the taxman, to get that corrected. You've then got your national insurance number, your fixed salary, and the number of hours you should be working each month. Okay. It'll tell you how your payment is made. Backs, if you see backs transfer, that's just the way that they send it from their bank into your bank. You've then got on the payments how much you've got paid. So 1,833 gross. They then take off your tax, your national insurance, and your pensions of 340. So you've then got your net figure of the 1,493. So that should be what goes into your bank account. So always double check that what they say they've paid you is actually in there as well. If you earn any overtime, what it'll do is increase in the payments box. So it'll show up under your gross pay and added up in that box. All right, so that's where it'll show up. The very bottom one, where you've got all the YTD messages at the side, that's where they will add together month on month how much you've paid in each of those accounts. So for example, the second two down, you got pens, so that's your pensions. So it'll be employer's contribution and the employee's contribution. So your employer will always pay as lump sum into the account, and you will top it up as well. So you get double, basically, got money going into your pension. And that's what it will be. So currently at the moment, state pension is around £185 a week. Now, we won't be able to live on that if we don't have any pension in place. So make sure that as soon as you get in employment, you start to save for your pensions, because it will make life a lot easier for you when you get into retirement age. Very quickly, we're just going to touch on some borrowing. Okay, there are different types of debts. You've got secured debts, you've got unsecured debts. Some are bad, some are not. So secured debts is where they're backed by an asset that you hold. So that could be things like a mortgage, or you could have a house, or a car that you decide to borrow some money against. So that will be a secured asset. So that if anything goes wrong, the borrower can take that asset off you to pay their debt. Unsecured debts are what's more commonly known as personal loans or credit cards. Okay, and that's where you just agree to pay a set amount each month back to the provider for the amount of money that you've borrowed. Now, good debts, bad debts, very easy to look at. So good debts is student loans, obviously, because you're getting a qualification. Don't worry about that as well, because you might not have to pay the full amount that you borrow. It all depends how much salary you actually earn further down the line. So ask around at your colleges and they'll explain to you exactly how it's worked, or Citizen Advice Bureau can do that as well for you. If you're starting up your own business, you could look at small business expenses. And obviously, mortgages to get your own property, they will be a good debt because you've got the property, you've got the roof over your head, and you've got that little bit extra to look at to make sure everything that once you've paid for it, that is all yours, and for your family, it's in your estate. Now, bad debts, we've got credit cards on a bad debt, and they potentially are a bad debt. It all depends if you manage them correctly. Credit cards are brilliant if you're making purchases from a provider that you don't really know, okay, because it gives you insurance for 100 days should the product that you've ordered not arrive, or it's damaged, or it's not what you requested. Okay, if that happens, you can claim that money back off the insurance company, so you're not out of pocket. Okay, the trouble you get with credit cards is if you spend money on it but then don't pay the debt, then it builds up with interest, and interest rates are quite high. And I'll show you an example in a second. All right, so use your credit cards to buy those purchases, but only do it if you've got the money in your savings account or your bank account to pay it off. So what you should do is, whatever your credit card bill, pay that off in full at the end of the month. All right, if you do that, then credit cards are fine. If you don't do that and you just pay what they call as a minimum payment, which is the smaller amount they'll accept each month, you will soon get into a big debt scenario. And I'll give you an example of that in a second. You've then got auto loans, so that's borrowing against your car. Okay, so because you might lose your car. Personal loans aren't as bad as credit card debts, but if you've got an emergency fund, you shouldn't need personal loans. Payday loans are luckily going down into the depths of not being available anymore, but they were really bad in the 90s and the 2000s. Okay, there are still some payday companies that will charge you nearly 100% in interest rate. So if you borrow £100, you have to give them £200 back. Okay, so be careful with them. And the last one is loan sharks. If you get somebody talking to you in a pub or something and suddenly become a friend and then say, oh, you're struggling for cash, I'll lend you some money, the possibility is they're actually a loan shark and they've just been watching you to actually take advantage of you further down the line. So it's very dangerous to borrow money off people you don't really know, because if they are loan sharks, then they will use some nasty tactics to try and get that money back off you, and will charge you a lot of money. So avoid at all costs. Very quickly, we're going to look at the different types of borrowing that you have there. So you've got the overdraft loans, student debts, they're all unsecured. Short-term loans are payday loans. Hire purchase agreements, buy now, pay later, Klarna, things like that, they're short-term loans. And then you've got your secured loans, which are your mortgages. Borrowing to do work on your house that's secured against a property, that's a secured loan. And then we're looking at the car, logbook loans, and credit brokers. Now, when you're thinking of borrowing, please look at your budget plan. Make sure you've got enough in there to be able to afford the payments. Okay, never borrow on the spur of the moment, because if you do that, you're making an impulse purchase and you'll get yourself into trouble further down the line. like I said, be careful of interest-free deals. They sound brilliant, but if you've not got the money to pay them off when you're due to make that payment, then they'll charge you a lot of interest on top of what you owe. I'll say to try and keep away from them if you can. So don't really shop around, or if you need to do any borrowing, look at it and take it from there to where you need to be. Just an example to finish on of how things can go wrong. So when you've looked at your budget plan, you need to buy a new car. It's going to cost £5,000. Okay, you've looked and you can afford £165 a month from your budget planner. So you go to your bank and they'll offer you that top figure. If you go to the car dealer, they say, well, I'll tell you what, Ian, I can do it at 9.9%, so it's a lot less. And look, you've only got to pay £104. You've actually got to pay it over a little bit longer, but you're saving yourself £60 a month. But in reality, you're actually going to pay back £6,297. So you've actually just cost yourself nearly £400 in payments. So if you've got a budget plan and you can use your budget plan, stick to your budget plan, it'll save you money in the long term. The biggest one is the shop with the credit cards. So if you've not been able to pay off your credit cards every month and you suddenly run up a debt, the bank will ask you to make a minimum payment of £29 a month, for example, in this case. That's your interest rate. Over the term of that, if you never use your card again, but you wanted to go all the way to repaying it, they charge you in total £5,144 in interest, and it'll take you 20 years and 7 months to repay that debt. By just increasing that payment to £50 a month, still with the same rate of interest, your interest will reduce to £956, and you'll pay it off in 5 years. So you'll actually save yourself 15 years of payments and £4,000 in interest. Now, as I said before, that's in an example where you've not used your credit card correctly. All right. If you can use it well, they're great. If you get into this scenario, they're a problem. So please try and avoid if you can do. Now, there is a great website on Bernardo's. If you look on Bernardo's, they've got a section in the What We Do box for supporting young people, especially leaving care, which will tell you things around all the benefits you can get, about potential grants you can claim for, against some charities and business that might be able to help you. So please have a look at that. It talks about bursaries if you're going into education. So that's a great website to have a look to see what extra support's available to you. But thank you very much for your attention today, everybody. I hope it's been worthwhile. As I said, this is being recorded and will be available to you to use at any time. Have a good afternoon and good luck with your future. Bye-bye now.
Thank you very much for that, Ian. There was a wide range of topics covered there with a lot of good information being shared. Just wanted to mention, so you mentioned council tax. So if you are in care, for instance, if you have lived in a care home or were fostered, you may be exempt from council tax and be able to get money off your council tax until your age of 25. To apply, you must have been in care on or after your 16th birthday for at least 13 weeks, continuously or not, from any time from the age of 14. Also, just to mention, if you are wanting to look for an independent financial advisor, you can go and search on www.unbiased.co.uk. Thank you again, Ian. A great webinar there, a lot of useful information. Thank you for watching. Enjoy and goodbye.